Watching Investment 360, we're speaking to Dr. Adrian Saville, CIO at Cannon Asset Managers, and he's looking at a couple of stocks that he's put on the table for us. My co-host this evening is, of course, Derek Jansen van Rensburg from BOE Stockbrokers. We had Ernest Kaplan in studio earlier, and we knew we were going to be talking to you about Pinnacle, which is one of the stocks that you've selected. And what were his words exactly?
Well, he basically highlighted that this is just an absolute bargain, and you need to buy this stock and buy bucket loads of it.
And buy bucket loads of it. So this must be speaking clearly to your story on Pinnacle. Can we start there?
Absolutely, Bronwyn. Yeah, we across our different portfolios, we have a material shareholding in the company. We've been invested for a number of years, and it's been a very successful investment. It's an exceptionally well managed company, and it has many of the attributes that are just desirable in a business of this nature. Very high levels of ownership amongst the executive. They recently have been involved in a significant share buyback. It started initially at 20%, but it's now on the order of about 15% because the initial seller has retained 5% of the 20 that they were selling back. They've recently produced really good results in conditions which, you know, they've been tough, and the results have been good. A big increase in earnings, very attractive return on equity. You know, I can go on. It's just a really good proposition.
Two big votes of confidence on this evening. Derek, any thoughts?
Yeah, look, and again, you know, just coming back to the sector as a whole and looking at the IT space at this stage of the game, Pinnacle definitely for me stands out as a good valuation player, and it is one of the stocks that I hold in some of my portfolios for clients with a bit of risk appetite. But just looking at the stock, where it sits at this point, and you know, looking at forward multiples, it does look cheap to me, and I still think there's some value to be unlocked there. But the question I posed earlier, and I pose to you again, is how much of the growth is going to be acquisitive and how much is it going to be organic? Because a lot of these IT companies, if you look at the likes of EOH, Datatech, you know, is now positioning itself for some acquisitive growth. And my feeling is for Pinnacle to really produce the set of results that it recently did, you know, it has to do acquisitive growth, which sets the bar quite high. And for me, it kind of like prices it in the share before it actually happens, which says to me that the market may get a little over-optimistic in this space.
I think that that's probably a fair concern, given that in fact, that's a theme that I would say probably applies to the South African landscape more broadly at the moment, that organic growth is hard to come by. And as a result, the appetite for acquisition, I think, extends beyond just Pinnacle. There's probably, you know, a number of companies that we could highlight in that basket. Datacentrics, for instance, recently at their results release suggested that they would be looking for acquisitive growth. As things stand, I think that it's reasonably likely that the company will produce a meaningful increase in earnings without any acquisitions in the current year, and that's a consequence not just of the existing growth pipeline, but also because of the share buyback. So we have a figure of about R70 in earnings, which I think is at the top end of expectations. But even if it were to get you know, in that ballpark, around 50, around 60, so we could be quite meaningfully disappointed. You're still talking about a price earnings ratio of 5 or 6 times forward earnings. And I don't think that that's lofty. On top of that, the company has in the recent past demonstrated very level-headed attributes in the acquisitions that they've made. Axis was an acquisition they made. They paid about 170 million for it. And to kick things off, they paid cash for the acquisition. So this is not about dilutive in terms of earnings issuance.
Adrian, in this section, Investment 360, we ask fund managers to table a couple of stocks that we're going to discuss through the segment. And I just want to highlight that you've chosen stocks that perhaps differentiate you from a couple of the other fund managers at the moment, and that's because of their size. They're not really on the radar screen. I look at something like ELB and Met Air, which you've highlighted. Yeah. That's why we're jumping into the stocks first, because you've offered us something very different and hopefully exciting. So can we talk to ELB and Met Air, and also why you are putting stocks like this on the table?
ELB and Mete have the same investment thesis as Pinnacle. They have the combination of really attractive value metrics and good quality. And I think that's the essence of successful investing, is to put that recipe together of attractive prices in good businesses. ELB, perhaps the most obvious argument you can make for ELB is the very, very strong balance sheet. It's a small company by market cap. There's about...
what does it do?
It's an engineering business, and they're involved in importing and distributing equipment, and then they work as consulting engineers, moving resources from pit to port. So they're essentially consultants and suppliers of equipment to the mining industry. It's been around for many, many years, but in its current format, under existing management, it has a well-established track record over the last decade. To go to the balance sheet issue, here's a company with a market capitalization of about 500 million rand. It has 600 million rand cash on the balance sheet. I think that would have any value investor's ears pricked up.
Makes for a good investment case there.
With no debt. Obviously, some of the cash is being held back for operations to fund current assets, but there is a raft of surplus cash. It's a regular dividend payer. It's been producing good earnings despite the recessionary conditions. So it has both of these attributes of great quality and really attractive value, but off most investors' radar.
Before we touch on Mete, can I get one more question in? How big is your universe?
You spoke about some of the things that we would offer as some competitive differentiators, and the fact that we build portfolios that I think look very different to the market and also go very deep into the market. So ELB is amongst the smaller companies that we invest in, but as it stands, the smallest company that we are invested in by market cap is ISA Holdings, which has a market cap of about 150 million. So we'll go a long way down into the universe. We cover about 250 South African companies.
Derek?
Mine's more of a general question, and I kind of share the same thesis with you when it comes to investing, and saying you look for your dividend payers, you look for cash on your balance sheet, and you look for healthy fundamentals, and that really gives you a catalyst and a driving case to buy a lot of these value stocks. But just broader, and in a broader perspective, I see you do have a lot of attention spaced, in the Mete, the Pinnacles, the ELBs, and as you mentioned, some of the smaller cap type stocks. Are you finding in general quite a lot of value in this space? And just looking what the market's done over the last year, surely there must be quite a vast array of these stocks that are showing potential, in that sort of smaller cap type space.
I think the smaller cap space is the most obvious, the most evident where there is value. But the dynamics in the market over the last year or so have really caused a wide diversion of valuations, and it's not confined to the small caps. So two of the stocks that Bronwyn mentioned earlier, Sasol and Anglo American, are of course at the top end of the market, and we see exceptional value in those businesses. So it's probably, I think I agree with you that it is particularly the case that there is very good value in patches. Industrials broadly are extremely attractive, but what we refer to at Cannon, we've been calling them home industries, the companies that have grown up oriented towards the South African landscape as opposed to SA Inc., which is the Naspers, Mr. Price, Aspen, superb businesses, but quite fully priced. Yes.
And very quickly, those that are following the conversation will know that we haven't touched on Metair, so you've got 30 seconds to give us your investment case around Metair, Adrian.
Sure, there's a balance sheet attribute, and that is this company has no debt. It's got a lump of cash, 300 million cash, versus a market cap of 2.5 billion. We think that the property portfolio is worth substantially more than their book value, probably in the order of 700 million. So the assets of cash and property represent R1 billion of a 2.5 billion rand company that in the last year produced about 500 million in operating earnings. That's a 3 times multiple.